Hi, Ron Janish here. We're going to take a look at the differences in results when it comes to selecting what to trade. Let's start with simple, what I call the 22. Now, the 22 are 22 Forex contracts Forex pairs rather, that uh, are really the combination of the majors. So, for example, if you have a pair that consists of the US dollar with the Japanese yen or the Australian dollar with the Japanese yen, that would be part of the major group. So the Swiss franc with the Japanese yen would be another one. So there's 22 ways that these can be combined, and this is what this consists of, this particular test. Now, notice that it only gets a return of 16.6% a year. But the exposure, in other words, how often we're using all of our money, is 1.96%, which is really ridiculously low. And the other thing that's important to look at is the max system drawdown, which in this case is 3.33%. And some people will look at the other numbers that we have here, the Sharpe ratio and these other things here. So let's, okay, so this is when we use the 22. Now, in the next one we're going to show you, or what I call the 59, and what we did was we added a whole bunch more of the Forex pairs that are traded by um, Interactive Brokers, because they're the low-cost broker. And here's what we came up with. So rather than a drawdown of somewhere around a little over 3%, we're now up to 5% on the max drawdown on the system. And rather than 16%, we're now up to 44%. And why is this if we're trading the exact same system? Well, the answer is because when you have a system using Andrews, you're looking for specific situations that give you an edge to enter on. And so when you use that and you have a wider selection of currency pairs or stocks or whatever it is that you use to trade, then you'll have more trades, and if they're typically winning trades, then you'll have a different percentage. In this case, it went from 16 to 44. So let's see what happens when we go to 78. 78 is approximately the number of Forex pairs that IB trades in total. Now, when we go to 78, we effectively almost double the number of trades we incur from what we originally started with, and we're now up to nearly 51%. And as we look at that number, we also have to look down here to maximum system drawdown, which in this case is 6.24, still a reasonable number. Now, the reason it's this low is because at any given time you're long or short different currency pairs, and you're taking advantage of specific situations. So that's what this particular historical study resulted in. Okay, and all we're using here are some really standard Andrews entry techniques. That's probably the most important thing, is some really standard Andrews things. And once again, notice that exposure, while in the past was somewhere around 2%, now has jumped up to 8%. And this is 8% of the $100,000 starting capital was used at any on average, I guess, and it's a good number. So, and this results in this kind of a wild number for risk-adjusted return and some of these other numbers. And notice that in each case, the percentage of winning trades is rather high. In the case of the 78, it's 66%. In the case of the 59, it's 67%. And in the case of the 22, it winds up being 69%. And notice in all cases, there are long and short positions. Okay, the one number that winds up coming up red when you get down to the 22 is the payoff ratio, and that's because on average, when it comes to the long trades, the risk per trade was not as good as it could be. And as you get to the 78, you'll see that that red is gone. No, it's still there. Yeah, it's still there. Let's see if it's there with the 59. Yep, still there. So the only issue that we really have with this particular system is that historically the payoff ratio was not over 1.0. And that, for some people, that's an important factor. For other people, they look at all these other numbers here and really realize it doesn't matter that much. So it really is up to you. Hope this gives you an idea of what kind of historical studies we've done with Andrews. And we'll see you next time. Bye.